Hi, this is Peter Schiff. This is Friday, July 31st, 2009. And I am recording this blog from a green room here at 30 Rockefeller Center. I'm waiting to do a Kudlow show on CNBC this evening. I just actually came from Glenn Beck, which I did live on Fox earlier today. So a couple of media appearances today, although probably by the time you see this video blog, they'll be finished. Anyway, it was a big day in the markets overnight, and today we got the second quarter GDP numbers, and a lot of people, including our president, are very pleased that the economy only contracted by 1%, and they're calling this a great victory, and they're proclaiming pretty much an end to the recession because everybody now assumes that the next quarter will be positive, and this 4 quarters of negative GDP growth will have come to an end. Now, it's already the worst recession, I think, since the Great Depression, judging by the numbers that we have. But the only way that we can say that the recession is over is if we're acknowledging that the depression is beginning, because that's all we can look at. Everything that the government has done in the name of fighting this recession has actually made the situation worse. We're in more debt now than when the recession began, so we're in a deeper hole, and it's going to be even more problematic to get out. All the government has done is force-fed more debt into the economy, and they've prevented the market from correcting the imbalances that so badly need correction. So rather than on the way to recovery, we're still making the situation worse. I talked on this blog some time ago about the cash for clunkers bill when it was just being proposed. Of course, it was enacted, and they announced today that it ran out of money because they quickly found that a lot of people turned in their clunkers for the $4,500, and they expanded, I think, the program today by another 1 or 2 billion. But I mean, think about what a crazy policy this is, and I pointed this out before. First of all, we're taking clunkers, cars that work, cars that were on the road, that are functioning, and there's no debt. People don't have car loans on these clunkers, and we're destroying them. These are valuable pieces of property. They have a use. When I was in high school, I guess my first car was a clunker. Most of us, when you buy a car, your first car is a clunker. There's nothing wrong with it. I mean, teenagers are happy to have clunkers. Why are we destroying them? And also, why are we encouraging people who own cars? And if they own clunkers, it's probably because that's really all they can afford, and they don't have any debt. Why are we giving them money to now take a car loan that they didn't have before? They're going to go into debt, to buy cars they can't afford. We're in trouble as a nation because we took on too much debt. The last thing we want is more debt. And the last thing we want to do is destroy assets and replace them with debt. And of course, a lot of the new cars that are being bought, they're imports. A lot of these cars are made in Japan and other countries. We're running up our trade deficit intentionally. Why would we do this to ourselves? This makes as much sense as what FDR did during the Great Depression, where we destroyed food. We destroyed crops. We slaughtered pigs, all to make the price of food go up. Why would anybody want to do that? You're in a depression. People are unemployed. People are hungry, and you're destroying food. But this is what governments do. This is how they solve problems. They make them worse. If you look at what actually happened in the market today, look at what happened to the U.S. dollar. It got hit pretty hard. The dollar index closed at a new low for the year. We're getting close now to the 78 handle. I mean, we're 78 and change, but we're almost getting ready to break through 78 even. In addition, the foreign markets are continuing to be strong. China bounced back from a one-day, 5% drop. It's almost gained it all back. Most of the stocks that I follow, that I own in Hong Kong, in Singapore, are just on fire right now. People talk about the rally going on in the U.S. stock market. U.S. stock market is a sideshow. The main event is happening overseas, particularly in the Asian markets. And that's because the fundamentals of those economies are far sounder than the United States. And any nominal gains that people are eking out in the U.S. stock market, I mean, they're having them pulled out from under them because the dollar is losing value. And I think it's going to start to lose a lot more value. We had some much touted or hyped, Treasury auctions this week. The government is selling, of course, record amounts of debt. And there's a lot of stories about, will the Chinese buy? I mean, will the Japanese buy? And of course, we're hoping that they do. I think we'd be better off if they didn't, because the more debt they buy, the more they enable us to hang ourselves. We're borrowing all this money to grow government. how is a bigger government going to help our economy? It's not. It's going to hurt our economy. And we're borrowing all this money to spend it on more consumer goods that we don't need and we can't afford. So the sooner the Chinese come to their senses and stop lending, maybe we'll stop digging ourselves into this hole. But it's obviously going to happen. I mean, there's no doubt about that we can't keep accumulating debt. And sure, we took on all this debt. And so maybe this GDP in the second quarter was down 1%. Maybe if we weren't incurring all this debt, it would have been down more. But you know what? We'd be better off. Having a slightly worse economy at the expense of trillions in extra debt. This constant trading of long-term or short-term gain for long-term pain is how we got into this mess. And unfortunately, the problems are now so big that we're not really buying that much time. I mean, we're not talking about the pain happening in 5 or 10 or 20 years. It's going to happen in a year or two, maybe sooner. These treasury auctions, one of these days, no one's going to show up. The only one there is going to be the Federal Reserve. And as I've mentioned time and time again, these are we're borrowing short term. This is an adjustment rate mortgage. We got a 1-year arm on a $13 trillion subprime mortgage. This is a big problem because when interest rates go up, I mean, look what's happening. I just looked at the news in California today. The delinquency rate on home mortgages in California is almost 10%. 1 out of 10 people in California with mortgages are behind in their payments. Do you realize what a big number that is? And you know what? It's going to go up more. It's going to get bigger. Because as real estate prices fall, more people are going to lose the incentive to make their payments on these overpriced homes that they were tricked into buying. And of course, more and more Californians are going to keep losing their jobs. Everybody's going to lose their jobs because companies are not getting the capital that they need to expand because the government's taking it all. The government's borrowing all the capital that might be available. And by keeping interest rates artificially low, we're not going to get the savings that we need to fund business expansion, which is what we need. I mean, everything the government is doing, they're trying to prop up the deflating economy. But in doing that, they're preventing a more legitimate, prosperous economy from rising to take its place, to hire the people who are unemployed, or to hire people efficiently to do things that we need because those people are currently being kept at jobs that we really don't need, that really aren't productive and aren't efficient and aren't contributing to our prosperity. In the GDP numbers we got today, the biggest number was, I think, a 9 or 10% increase in government spending. How are we better off because the government's spending more money? They're spending our money. They have to take that money from us to spend it. They make us poorer every time they spend money. Now, they're not taking it from us in taxes. They're simply borrowing it from the Chinese and the Japanese and obligating us to pay it back with interest. So in addition to our own debts, now we have to worry about all the additional debts that are being accumulated in our name by our leaders. And then Barack Obama goes on national television and tells us that we should be happy, that this is great, that his plan is working. Working out for who? We're deeper in debt. The economy is in worse shape than when he was elected, and we're supposed to be happy about this? Now, what he's saying is, of course, well, if it wasn't for all these plans, it would be even worse. Well, how can you even argue with that? How can you prove? How do we know what would have happened had he done nothing? No, I agree. I think that, there would have been some problems. There would have been a lot of problems for the people on Wall Street. The people from Goldman Sachs and Morgan Stanley, they wouldn't be as rich. They wouldn't be making oodles of money right now if it wasn't for these bailouts. I read that the bonuses that they're earning now exceed their profits. Imagine if you're a shareholder and all the profits that the financial companies are earning are going to the very guys that destroyed the company in the first place. This is ridiculous. So obviously, Wall Street would be in worse shape, but I think Main Street maybe would be on the way to recovery. Maybe we'd be getting our act together. Sure, there's going to be pain. There is no solution without some pain. But let's face it, let's get it over with because we're just making it worse. And the problem is we're making it a lot worse. We're not just making it a little worse, right? We already know the consequences of the Bush Greenspan stimulus. We got a huge hangover from that, but they're doing it worse. Obama and Bernanke, they're off the charts. This is a lethal dose of stimulus, and we're going to have the mother of all hangovers when it's over. Anyway, thanks a lot, everybody. I'll be back again soon. Have a great weekend.